high level overview, what are we looking at here for your S&P on the daily? You can see if we scroll back here, this nice long run here ever since last year, just slowly grinding away, finally withered out here in December, pullback, little consolidation here, popped again. January brought all-time highs, February all-time highs, and then now we're getting a pullback ever since mid-February off those Januarys, so straight down. Obviously, everybody knows the story, right? But what do we care about in here? Well, first, we're getting a lot of volatility, which means our options premiums are a little expanded. They're a little juiced, so that's good. You can sell or buy whatever because we're getting the big moves, right? So it's okay to purchase if volatility is high, if you kind of take advantage of that divergence and you're getting bigger swings, right? So you're not just getting those dollar swings and you're paying a lot of money. You're paying a lot of money because everybody's pricing in those huge swings. So that's okay. Also, if you're selling premium, you're getting a lot out of it as well. But you also have to be aware of getting whiplashed in here either way, right? Because the volatility is so high. So pull back on some volume. You got volatility high, and also you have this 9-day EMA in here finally crossed over or under this 200 SMA. So that is saying, hey, this is bearish. This is not considered a golden cross. A golden cross is just 50 SMA crossing under a 200 SMA or vice versa, whichever way you want to look at it. One's bearish, one's bullish. But you have this 9-day EMA crossing under here. We like these shorter dated exponential moving averages because they're kind of front weighted, right? So it's kind of playing more with what the stock is doing more recently rather than these longer dated moving averages here, like this 200. See, it's taking a long time for us to kind of contract back here, whereas the 9-day EMA is basically riding more or less with the stock currently. So that's the reason that we like the 9-day EMA. We got a cross under on here of the 200 SMA. So we are officially bearish for the moment, but can this fit 550 hold? It's going to be up to tomorrow to see what is going to happen in here. So if the 550s do hold, then we might get some consolidation in here, little relaxation here with our moving averages, and then we can start to work our way higher. But the problem is you don't really have that many points in here for the 550s. It was a nice resistance for us back in June and July, but really the main area of support that we're going to be looking at is going to be right here at this 538 range. And that's kind of where everything hit in September. It was a nice support here in July. It was a banged up resistance here in June as well. So you have more points here for that 530, but the 550s could hold, and we could just be tired of this big pullback in here, right? The market's just sick and tired of everything. The Qs are, I mean, they're starting to wither out a little bit as well, right? They're tired because you were getting those nice rips and dips quicker and harsher than the SPOs. You have your bonds kind of trading a little bit with some positive drift in here, but you're also still trading inversely. So all in all, the 550 could be a nice range for us here on the daily chart to long term to just kind of watch for some consolidation and maybe a pop in here. Good news is if we do get some consolidation within the next 2, 3, even 4 trading sessions, it's these green days that we're going to have in here are still going to be some good pops in here, right? Because you had all this huge volatility working your way down. I mean, you're getting $10, $20 moves in here on the way down on some volume, right? So I don't see why when we turn green, it would do anything different. Obviously, I don't think it's going to be $10, $20 rips, but you are still going to get $5 rips. Whereas if you look back in here in January and December, I mean, these are all $2, $3 moves just for one day, right? So volatility, super juice in here. So when we do start to kind of go green in here, and even if we're just consolidating, we're going to rip up $5 in a day easily. And that's it's going to be no big deal, right? And for us having a $5 day, that's going to be a down day in here from what we just had over the past almost now 4 weeks. So again, we're looking at this 550 resistance wise. It's going to be here at this 565. Above that, it's going to be this 575 level that we mentioned in the past, but we have to be aware of what our moving averages are doing. We're oversold on the RSI, but remember, we got a bunch of volume in here. So as soon as we turn green and this RSI resets, we could get some more volume in here and a nice little rip up, back up to these 565s easily. But this channel, $15 channel, we might be trading in here if we want to confirm these 550s as a nice support. If not, if this breaks, breaches, we are done. We're going to be down here at that 538, 539 range. Now we keep on mentioning volatility. What is our IV ranking here? It's at 53 currently. You have right around a $6 expected move by tomorrow's expiration. Obviously, we've been two timesing those like it's nobody's business each day. So you take that for what it's worth, but everybody's pricing in right around $6. You go out to Monday, $10. You go out to next Friday, everybody's pricing around $17. And if you go all the way out to your April monthlies, right around a $30 expected move in here. So all in all, again, we're going to watch these 550s. You might get some nice rips in here to kind of take advantage of if you're intraday trading. 565 is going to be a resistance for us. Below the 550 mark for our support, we're going to be looking at this 538 in here. So we will see if those 550s can hold going forward. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.